In the vast landscape of cryptocurrency, shady maneuvers to manipulate prices have become an unfortunate norm. While these tactics might favor the hefty wallets of crypto whales, the average holder often finds themselves at a disadvantage. Now, imagine navigating this cryptic world with a coin like Shiba Inu. It's a wild ride. But here's the twist. There's an invisible force at play, something beneath the surface that could be steering the fate of Shiba Inu. But what am I talking about? Let me explain. Disclaimer. Shiba Inu, once a standout player in the crypto arena, recently made waves with the introduction of Shibarium. This Layer 2 scaling solution garnered attention by processing over 200 million transactions in just 4 months, marking a substantial achievement. One would naturally expect such a success to be mirrored in Shiba Inu's price action, yet the market response raises compelling questions. In a curious twist, Shiba Inu's price growth appears to be moving at a snail's pace, compared to other altcoins that haven't achieved as much during the same period. This divergence between accomplishment and market performance has become a puzzle for the community. While Shiba Inu's price shows a 30% growth during the year, the perceived underperformance given the launch of Shibarium has sparked doubt. Investors, anticipating more significant surges, are left pondering whether there's more at play behind the scenes. The growing sentiment within the community is one of skepticism, with whispers of potential price manipulation gaining traction. It is suggested that despite Shiba Inu's strides in technological advancements, unseen forces may be suppressing its price, raising concerns among investors about the true market dynamics. Is the market playing tricks on us, or is there something more sinister at play? Let's unravel the mystery together. Today, we're tackling the intriguing question: are they manipulating the price of Shiba Inu to wipe you out? Stick around, and let's separate fact from fiction in the crypto wilderness. Price manipulation, which Shiba Inu is currently being accused of, refers to the intentional act of influencing the price of a financial asset, such as a cryptocurrency, for personal gain. In the context of Shiba Inu, if its price is growing slowly compared to other altcoins, despite the success of a major project like Shibarium, it could raise suspicions of potential manipulation. For instance, imagine a scenario where a group of influential holders or entities with significant Shiba Inu holdings decides to suppress the price growth. They might strategically sell small amounts of Shiba Inu at regular intervals to create a perception of limited demand, slowing down the overall price appreciation. This could be done to accumulate more tokens at lower prices or to maintain control over the market. Price manipulation can also involve spreading false information or creating a negative sentiment around a particular asset. In this case, despite Shiba Inu's successful project, if false rumors or negative news are circulated, it could impact investor confidence and hinder the coin's price growth. It's important to note that the cryptocurrency market is complex, influenced by various factors, and not all instances of slow price growth are necessarily indicative of manipulation. Market sentiment, investor behavior, and external factors also play significant roles in determining price movements. However, suspicions of manipulation arise when there is a noticeable divergence between the fundamental developments of a project and its market performance. Another factor contributing to this is that Shiba Inu has a history of being subjected to price manipulation in the past. Quite some time ago, KuCoin, a prominent crypto exchange, faced allegations of manipulating Shiba Inu by reportedly encouraging investors to engage in shorting Shiba Inu for profits. Shorting Shiba Inu means borrowing and selling Shiba Inu tokens, expecting their price to fall. The goal is to buy them back later at a lower price, making a profit. It's a strategy used to capitalize on a cryptocurrency's potential decline in value. According to the disclosed email, the trading platform KuCoin not only suggested users short Shiba Inu, but also provided 5x leverage for this purpose. The mention of 5x leverage by KuCoin adds a layer of significance to the situation. By offering 5x leverage, KuCoin is allowing users to amplify their exposure to Shiba Inu when shorting the cryptocurrency. This means that users can control a position that is 5 times larger than their actual investment. Additionally, KuCoin is conducting a promotional campaign that was running some time ago, where users had the opportunity to win a prize pool totaling $15,000 by participating in these transactions. A Reddit user shared a screenshot of an email indicating that KuCoin is offering free prizes to users who participate in shorting Shiba Inu. Dear valued KuCoin user, Shiba Inu price decreased by 34.6% last week. If you short $1,000 with 5x leverage, it will now be worth $2,730. Engage in Shiba Inu contract trading, capitalize on market fluctuations, and share in a reward pool of $15,000. the email stated. The suggestive email from KuCoin advocating the shorting of Shiba Inu with 5x leverage, along with the promotional campaign, strongly indicates a form of price manipulation. This manipulation, not aligned with Shiba Inu's interests, introduces an artificial selling pressure on the cryptocurrency. The use of leverage amplifies this impact, potentially leading to exaggerated market fluctuations. Such orchestrated downward pressure can be detrimental to Shiba Inu. Firstly, it creates an environment of distrust and uncertainty among investors, eroding confidence in the natural market dynamics of Shiba Inu. Secondly, it introduces speculative trading behavior driven by the promise of rewards rather than genuine market forces. This artificial influence may distort the true value and potential of Shiba Inu, hindering its growth based on merit and genuine market demand. Furthermore, the potential for unjustified losses incurred by Shiba Inu holders as a result of this manipulation could lead to a loss of faith in the cryptocurrency. In the long run, this kind of market manipulation may impede the organic development of Shiba Inu and compromise its position in the broader cryptocurrency landscape. However, this situation took place over 2 years ago, but we need to understand that it was not revealed until the email was leaked, suggesting a delayed realization by the broader community. Interestingly, despite the historical incident, it appears that Shiba Inu's price wasn't significantly affected in the long run. However, this historical context establishes a precedent for potential price manipulation in Shiba Inu's history. As we navigate the present, the possibility of price manipulation persists. Confirmation of such tactics may only come to light if similar leaks occur. Nevertheless, making assumptions based on historic trends makes sense as patterns often repeat in financial markets. By analyzing past instances, investors and analysts can identify potential red flags or irregularities, helping them to form educated assumptions about the likelihood of similar events occurring in the current market. While assumptions based on historic trends are not guarantees, they provide valuable insights into the dynamics of an asset. Understanding the historical context allows market participants to make more informed decisions and potentially react to emerging situations that resemble past patterns. Some members of the Shiba Inu community entertain the notion that the current price suppression of Shiba Inu is a deliberate strategy orchestrated by large holders with the intent to eliminate a significant portion of existing holders. The assumed reasoning is that when typical traders find their Shiba Inu investments falling short of expected returns, a significant number may decide to liquidate their holdings. The envisaged mass selling triggered by these disillusioned traders serves a dual purpose in this narrative. First, it creates an environment where a sizable portion of the holder base exits the market, effectively reducing the number of participants. Second, it's hypothesized that this mass exodus, fueled by unmet expectations, could bring an end to the ongoing price suppression orchestrated by major holders. With a diminished holder base, the assumption is that the manipulative pressures on Shiba Inu's price would ease, allowing for a reset of market dynamics. In this scenario, the natural growth trajectory of Shiba Inu, which was anticipated around 4 months ago following the launch of Shibarium, could then unfold without the constraints imposed by the speculated manipulation. The logic behind this assumption lies in the belief that, by clearing out disillusioned holders who might be tempted to sell under the current conditions, Shiba Inu could potentially create a more stable foundation for its value. This, in turn, might pave the way for the cryptocurrency's organic growth to align more closely with its underlying developments, such as the successful launch of Shibarium. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.